Good morning, everybody. How's everyone doing today? Friday, April 14th. Let's go. It is finally, maybe I shouldn't say finally, but it's just the end of the week. As we were saying yesterday, this week has absolutely flown by. It's been like a blink of an eye, and perhaps it's the nice weather. This morning, just another beauty of a day here. Just clear blue skies, sun is shining. It's finally getting to the weather where, you don't need to put warm clothing on to make yourself comfortable in the morning. It's just like you roll out of bed, you can throw on some shorts, go on over to the desk. You don't have to put a sweatshirt on, put a pullover on, sweatpants or regular pants, none of that stuff. It's just stay comfortable, stay warm. It's lovely. I just love it. I love it. What can I say? Anyhow, it's a Friday, right? So let's be very, very mindful today of Friday rules. So let's talk about Friday rules before the stream really heats up and we get a bunch of people in here. This is what's going on, right? It's a Friday. Friday does not mean we drop an F in the chat. Friday just means that, hey, let's take it a little bit relaxed today, first of all. No need to be on edge. If you've got a green week, your job is to keep your green week. Your job is to, at all costs, avoid going red on the week. Keep your profits today. So that means no emotional trades. That means no swinging for the fences. It means not trying to hit a round number. That's a big one that a lot of folks fall victim to, right? The round number syndrome. I'm sitting at up 10 grand, or let's just say you're shy of 10 grand. Let's say that maybe your account balance for the week has grown. Let's make up a stupid number here. 9,969. Is that inappropriate? I think Elon Musk's Twitter childishness is getting to me. But you get the idea, right? If you're very, very close to a round number, something like, again, if you're trying to hit a $10,000 goal for the week or whatever, and you're at 9,900 and whatever, don't don't beat yourself up over those last couple of bucks, because usually what happens is you start taking trades, trying to hit that number, trying. The next thing you know, you're sitting in like a 200, 300, 400, dare I say, $1,000 loser, and you've just set yourself back big time. So don't, take it easy with the trying to hit the round numbers. If you've got a great week, keep it green. And of course, the flip side of the coin is if you've got a crappy week going on right now, it's all right. It's okay, right? There's 52 weeks in a year. One of those should not break your trading. Unless you blow up your account, it shouldn't break your trading, right? So if you've got a red week, just make sure that it stays controlled. Don't do anything crazy that puts you on tilt today. Stick to taking good setups, know your risk reward, stop out when you need to, and don't swing for the fences with increased position size, right? Just because you're red, if you're trying to make it all back on a Friday, usually what happens is people size up, right? It's like, okay, it's now or never. It used to be Fridays only. Like, I'm sure you guys remember this. Before it was 0 DTE every single day on something like the SPY or the Qs, it was Friday was the day to be degenerate, right? Because that was the expiration day. Contracts were cheap. It feels like eons ago, but remember when Amazon was trading at like 3,000? The stock price was 3,000 and contracts were, really, really expensive if you're trying to trade that any other day than Friday. It used to be that Friday was like the top degenerate day. Same thing with Tesla when it was trading around 1,000, right? Just bringing back the good old memories of Fridays being expiration day. Now we get it every day, but anyhow, let's not do anything crazy with position size on a Friday. That's the main point of sort of getting into this as well when we're talking about Friday rules, okay? So Friday rules are in play. Everybody should be responsible today. Everybody should keep their week green. If you've got a green week, if you've got a red week, it's all right. There's, again, 51 other weeks in the year for you to make it back. One week should not wipe you out. All right? So with that said, we've got a couple of things going on this morning that we got to button up before we get into the ES technical analysis. Of course, 8:30, which is why we started the stream early. We're going to be getting retail sales month over month and the core retail sales. We will be getting Waller speaking at 8:45, and I believe we had Bostic make a comment. I don't know if it was last night in the overnight session or sometime earlier this morning, but I believe Bostic, I'll just put a B here for Bostic, said that we're going to do one more 25 basis point rate hike and then be done. All right, so the market kind of knows the path forward for rate hikes. We'll see if retail sales kind of confirms that, and we'll move along from there. But in the and of course, let's not forget 10 a.m. consumer sentiment, inflation expectations. So we'll get to that stuff as it rolls around at 10. But the big deal this morning is really what's going on with the earnings calendar, right? So it's fine and dandy. We can see what the market's reaction is to the retail sales numbers. However, the market, specifically the S&P, where there's more weighting towards banks, obviously, is really moving on JP Morgan news, Citi, Wells Fargo, PNC, BlackRock. And I actually did the research. I looked up what this Berna company is, and it's actually probably pronounced like Berna, which is just a terrible name because they are a quote-unquote, they are a quote-unquote launcher company. And by launcher, they basically mean shooting apparatus or blasting apparatus. If you get what I'm talking about, YouTube's kind of weird about talking about, I guess firearm would be maybe a more acceptable term, but they make non-lethal weapons, basically. Non-lethal weapons. So you can look them up. The stock is at like $7. It's something I wouldn't touch with a 10-foot pole. I have no idea why Earnings Whispers noted them as a most anticipated earnings release. That seems completely out of place there. I mean, nobody cares about that company in the face of JP Morgan reporting earnings. So anyhow, it is absolutely useless to have them at the bottom of our list. We will not be looking at them, but we will be looking at most other of these reporters, right? The big guys here. Okay, so let's do that now. Anything based on those earnings in the headlines, and yes is the answer, right? I saw this before, right? But JP Morgan Chase posts record revenue that tops expectations on higher interest rates. Wells Fargo also did well. Bank's first quarter profit and revenue top the street's expectations. Ether is rallying 12%, topping $2,100 after some tech upgrades there. Vans, I don't know if that's actual Vans or if that's like a PacSun or what's the other one, Zoomies, or there's probably some other ones I'm forgetting, but maybe a retail store. They're getting an upgrade there. Boeing having some troubles this morning with 737 MAX production, parts issues there. United Health raises profit view on Medicare Advantage Okay, so that's probably good for the stock. I know it's probably not great for consumers, but anyhow, good for the stock. What else is going on here? Looking for just stock-specific stuff. Lucid first quarter deliveries underwhelm as demand concerns plague the EV maker. You're seeing a lot of stuff about Tesla demand really waning as well. Banking crisis forces ECB policymakers to rethink rate hikes, but focus still firmly on inflation. No surprises there. What else? Downgrade to Rivian. So look out, EV industry kind of getting beat up right now. Not the greatest. What else are we looking at? Stock-specific stuff. Anything concerning the earnings? No. Okay, so now that we've briefly run through that, let's just get on over to the platform here. JP Morgan is up first. I mean, how could you ignore this stock in the earnings realm, right? I mean, they haven't even reported yet, but they're sort of well, I guess we actually saw the headline that the numbers are out, but the conference call hasn't happened, basically. The conference call hasn't happened, and usually that's where the fireworks start to go off, but you can see clearly that we're getting a huge gap up here in JP Morgan, opening around 136.50s, which brings us up to this area on the daily time frame, which is of course off on the left-hand side. So if we think about what the banking crisis did for the market, obviously it was a big drag on markets here. What's going on? I mean, we're gapping big time out of this consolidation range on earnings. So, of course we need to be mindful of gap rules, and we'll briefly walk through gap rules in just a moment, but for the most part, gapping out of this range where everybody was, skeptical of the banking sector, skeptical of financials, thinking that, oh no, there's going to be more contagion, everything's going to go to hell in a handbasket here. I mean, the gap out of that range is just proving anyone who is shorting down here absolutely wrong. Now, would it have been wise to take some profit there after this run, seeing a little bit of give back? Probably. So there's definitely some profit taking. I'm not saying that everyone who sold down here is a new money short. There's definitely some covering of longs, right? But 136.50 on the open is quite significant in the upward direction. Obviously, the concern is if this fades off all day, so if gap rules truly are in play, if we fail the overnight high, rotate down underneath the opening print, I mean, from a location standpoint, of course, it's bullish remaining outside of this range, but intraday, on today's session specifically, if JP Morgan is not continuing to perform in the regular trading hours and this fades off in the regular trading hours, you could imagine how that puts some severe downward pressure on the S&P, right? You can make that case. So I would certainly be watching JP Morgan here on today's session with the gap rules in play, noting that we want to see if there's a failure of the overnight high here, 137.66 as of right now. This is pre-conference call. And if we fade through the opening print, which is roughly around 136.50, 136.40, 25, as I'm literally talking to you, it's jumping around, of course. If we fade underneath that, there's quite a ways to fall if the gap is going to close all the way down at 129.25. I would not expect that on today's session. The gap is so large that I would expect a partial gap fill or just sideways, really choppy action up here. Remember, when a gap is this significant and large, we typically tend to think that, okay, it's either going to be very difficult to trade or the gap will not fill all the way. Basically, what we're saying is you need to ME. No, this is not, it's not about me. It's about managing your expectations, right? So manage expectations here on JP Morgan this morning. I think that it may be, it definitely looks enticing to trade, right? Everybody always gets excited about a massive gap in the upward direction. But at the end of the day, noting the psychology of what's going on, it's really two things that keep this from being a clean and straightforward trade. Number one is that you get anybody who is short from down here expecting this to play out as a bear flag breakdown, expecting, the premature anticipation of a head and shoulders breakdown, whatever. All of those shorts, if they're weak-handed shorts and they're not comfortable with holding this through earnings, obviously, they're going to be closing out. What do shorts have to do to close? They have to buy, right? So if there's buying pressure from the shorts, that's a move in the upward direction. And then number two, you get the opposite. You get the folks who said, aha, here we go. This was terrible trade location, right? We don't want to be short on the lows. Let's short it at these higher prices and then look for a rotation back into those lows, right? So you get the more technically astute crowd, or more patient crowd, whatever you want to call them, who wants to start initiating new short positions. So shorts are on the table. Shorts, there we go, as new shorts. Okay, and you're also, number three camp is, in addition to the short covering buying, you're going to get some folks who say, this is a buy because fundamentally the numbers make sense here. The numbers make sense. Now, I don't necessarily believe in that, right? Because everything is priced in as soon as the information becomes publicly available. That's what algorithmic trading did for the world. But regardless, this gap up is already pricing in the good news basically from earnings. So some people will be new money buyers up here as well, but I think it's probably a lesser driving force than these first two. But anyways, with all of this conflicting psychology taking place here, you could easily make the argument that if you have buyers trying to squeeze out of this because they're shorts, but if you have new money shorts trying to put downward pressure on it, how does that neutralize? It's right in the middle. Right? So at the end of the day, I think managing expectations here is important. Obviously, it's a bullish force for the markets in the grand scheme of things, getting out of this nasty lower range. Let's not sugarcoat it. Let's not get it twisted. As we gap out of this range, obviously it steps in the upward direction that is bullish. But on today's session, if JP Morgan fades off, we can easily imagine and put together the pieces of the puzzle, how that equates to downside for the S&P. Okay, so that's JPM. We know that WFC Wells Fargo also reported here. The numbers are out. The conference call is yet to take place, but big gap up, right? So same idea. I'm not going to rehash the same psychology. Let's take a look at C for Citibank. A little bit weaker here. A little bit weaker, not holding up at these highs as well as JP Morgan or Wells Fargo. If we look at BLK for BlackRock, big move in the upward direction here. Again, I think that, this one's sticking. This is a lesser, I would not, although yes, it's nice and pricey, it's the beast of banks, so to speak, it's not necessarily a good trader. BlackRock is not a good trader. JP Morgan far superior in terms of the options chain there. So be mindful of that. But BlackRock, yeah, it's holding up. It's holding up. Of course, that's going to be bullish pressure. What else was on that list? UNH from a healthcare perspective. What's going on here? Second heaviest weighted sector, the healthcare sector, right? So certainly worth paying attention to. It's relatively unchanged from the prior day's close. It's not that far off, even with earnings. We're still inside of the prior day's range, so I would not look at this and make any, any major assumptions as to what this should do for the market. It's been on a tear here. Is it reasonable that it, middles out? You get some profit taking from the longs. You get shorts looking for a pullback. Yeah, I think that's totally reasonable. Nothing crazy in terms of pre-market indications. So overall, the earnings season has begun. And with that, right, I think if you want to just keep it simple and look at a proxy, you could use something like the XLF. Big gap up here. Obviously, this is putting bullish pressure on the market. So we'll see. As tech earnings come out, that'll be a big tell, especially some of the discretionary names. That should be the next major focus for the market. But so far, so good. On today's individualized Friday session, I think we've done something impressive here in the upward direction. Okay? Rose Casanova, thank you for joining as a supporter. I feel like you've been a supporter before, maybe not, but if you're rejoining, I certainly still appreciate and continue to appreciate your support. If it's your first time, then welcome aboard. Thanks a bunch. So good morning, everybody. We're sort of just ranting a little bit about earnings, the financial earnings. We, of course, just took a look at JPM, that's JP Morgan, and the big solid gap up that's taking place thus far. It's 8:30, so what does that mean? It means that the retail sales numbers are out. Let's take a look at the ES and see what our reaction is here so far in the morning session. So a little bit of volatility. You can see a minor upper wick here, a little bit of a lower wick, trying to resolve lower slightly, just saying that the candle's got a red body thus far. Nothing really impressive though. Obviously, this week the big deal was CPI. We've got that in the rearview mirror. We also had PPI, which then sort of, if you think about the order of how things came out this week, it's actually almost the order of importance, I would say, for the market's caring, so to speak, if that's any decent way of putting it. CPI is first and foremost, the most important read in the market's mind of inflation, other than PCE, which the Fed, of course, likes. PPI then follows that because it gives us a hint about what could be coming in the next cycle of CPI. And then retail sales is last up on the list because it tells us about the consumer and how potentially earnings will be impacted from a corporate perspective. So I think it's a fair way to say that we just waterfalled through this stuff from most important to least important. So I'm not surprised that the market's reaction here this morning is quite muted and we're basically unchanged on the retail sales numbers. So let's go ahead and go back on over to the economic calendar and just briefly refresh this page here, see what the numbers actually were, and then we'll jump right into the ES, of course. So what do we have here? Yeah, they're taking a beating. taking a absolute beating here, came in missing the expectations big time. So retail sales month over month are down about 1%. Expectations were 0.4%. Previous was 0.4%. So the trend of retail sales is certainly concerning from a recession perspective, right? If people are not spending money, if retail sales are down, that's an early indication that, hey, corporate earnings may take a hit through this next cycle. But here's the deal, right? One of the things that's definitely worth considering is that everybody has been able to see this coming for a very long time. These numbers, like although they're a miss from the forecast, it shouldn't it doesn't strike me that anybody is dramatically surprised that retail sales are down. It's almost like the expectation was to miss the expectation, right? So I think as these larger earnings conference calls start kicking off, you want to start paying a close attention to, like, what's the forward outlook after this recession? I think everybody's already kind of priced in, hey, things are going to get kind of shaky here for a bit, but like, what's the longer term outlook is kind of the next. If the market's a forward-looking instrument, that's how we want to think of it, all right? So as the season kicks off, as we get deeper into the reports from companies that really move markets here, we'll, of course, keep you updated in the midweek and weekend updates on the channel. But for now, that's, I think, where the market's mind should start headed next, is like, what's the outlook for recovery? This is the recession that everybody has seen coming. Everybody has seen it coming. It's going to make it easier to digest, in my estimation, because adjustments could be made ahead of time. If you get blindsided by the recession, then it's like, oh my God, geez, like what the heck just happened? Now I've got to like play catch up and adjust. Catch up Kings, I'm sure you're in the chat. Shout out. But no, you've got to play catch up and adjust like, okay, we just got blindsided by this thing. How are we going to recover going forward? Whereas in the current situation, it's like, okay, we know this thing is coming. How can we position ourselves to best handle it? And then how can we take advantage of it on the back end? Okay, so obviously I'm no CEO of some grand company, but we'll see what they have to say as the reports come out. All right, let's do what we do best, which of course is technical analysis. So the market's responding a little bit more bearishly now, which it should, right, on bad retail sales. But still, I mean, look at yesterday's range. You mean to tell me that this is a quote unquote crash from retail sales? Think again. So let's do what we do best. As we just said, technical picture always starts from a top-down view, starting on the 4-hour time frame chart. What do we see here? I mean, this is certainly an uptrend. If you look at this segment, right? If we think about this in the grand scheme of things, I would say that we're probably just in a neutral trend, right? We're attempting equal highs from back here. We are no longer making lower lows. I mean, these are higher voice crack. Look at that. Going back to like high school here. These are higher lows that have been forming. This is certainly a set of higher lows that have been forming. If we take the nuanced approach of an hourly time frame chart, I mean, quite clearly this is still bull flag consolidation. We were very concerned about this as an overall range. And what took place yesterday was impressive, right? We broke the range in the upward direction after a morning recapture of the midpoint in the S&P ETF, the SPY. We'll get to that in just a moment. In the SPY, the hold of 409 was much more obvious. And remember I told you guys, hey, I should have been watching the SPY even though I was trying to trade the ES. Yesterday I was watching the SPY, and the hold of that 409 certainly helped give you a little bit more confidence even though the ES opened underneath and was trying to sloppily resolve that 4132. So it doesn't hurt to have both up. I would not say that one leads the other. I'm sure there's some mathematical genius out there who could tell you which one leads which, under which circumstances, after a certain contract change, whatever. That doesn't concern me. It's just like if both of these things are holding up near structure and one of them looks better, okay. If it starts to break out, there's more of a reason to go with it. Okay. So anyhow, one of the things in trading, right? This is just a side tangent, and maybe this is because it's a Friday. I feel like getting into it, but one of the things you have to do in trading is you have to recognize what you do wrong or poorly, and you have to make a decent effort to fix it. This is like, I hate to be like so, I don't know, cliche about it on a Friday, but it's even like it goes further than just trading. I mean, anything in life, if you're trying to get better at it, you need to, number one, identify what you've done wrong, and number two, take proactive steps to fix it. So yesterday I watched the SPY after getting absolutely hosed on the move in a previous session, right? So anyhow, just something to share. I don't know if that helps anybody out, but Hopefully it does. In terms of the ES on the hourly chart, though, again, we've broken the range in the upward direction. Everything's fantastic in the pre-market. We're already getting a break, retest, and hold of the top of the range. We're holding up above 4160. As long as we're above 4160, we're above the top of the range, and that does strike me as a constructive look for continued upside. Now, you might be saying, like, hey, after this extreme rally yesterday, are we overbought? Are we overbought? And the answer is, like, not really. I mean, the market's been coiling for how many days now? Let's say, let's count this as well. So 1, 2, 3, 4, 5, 6, 7, 8 days. 8 days we've spent in balance. It would not be an overextended move to break and continue in the upward direction after 8 days in balance. I mean, sure, the buyers had to put in an impressive amount of work yesterday, but think about all the pent-up pressure in this box. If it needs to release, it's going up, right? Or in theory, it should if we hold the top of the range. Let's be clear about that. Obviously, a lower high back underneath, you start to be concerned about look above and fail. We'll talk about that in just a moment. But for the most part, holding up above 4160 strikes me as a very bullish look, looking for continuation. Now, what would be some overhead targets is the next reasonable question to ask, and to scrunch the chart up and show you where it's coming from. Previous structure back here strikes me as important. Now, it's much clearer to see if we turn off the extended hour session, do something like this. There's your rejection. That upper wick gets very, very close. The next zone to be really focusing on is 4185s. 4185s on the upside. All right. So that's what we have if we see continuation. It's like almost right there, basically. Remember that in the pre-market, we're sort of pulling back a little bit with these retail sales numbers. So the idea would be continuation here does something like this on today's session. All right, we produce a higher high. The hourly uptrend remains intact. We can then afford another higher low pullback, and we're good to go. Right, so the higher time frame structure here does strike me as constructive in the upward direction. Let's move on down to a 15-minute time frame chart and evaluate what's going on from a shorter, like what's happening on the open. What are the opening indications perspective? So that is what we'll do here on the 15-minute time frame chart, just adjusting that overnight high to the top of the wick there. And let's get started. So when we're looking at a 15-minute chart, we always ask the same 3 questions every single morning. You're probably like, Matt, I'm sick of it. I know exactly what you're going to say. And I would just say, good. If you know exactly what I'm going to say, then what I'm doing here is working. Because this is how you should be thinking about the market, in my humble opinion. Number 1, where are we opening in relationship to the prior day's range? Here's the high, here's the low. We are opening in range, but certainly well up towards the top of a trending day's range. So certainly opening in bullish territory, but it's still, from a technical perspective, in balance. We are in balance. We're inside the prior day's range. Maybe we'll give this a little bit of an up arrow at the end to say that the buyers have an edge up here, certainly in the upper third. If we think about question 1.5, which you always ask when we're opening in range, it's where are we opening in relationship to the value area. Value area high is mixed in here with basically all of these levels are one and the same. I would just treat this as a zone up here to watch. To give you the number, it's about 4177. Yeah, 4177. I would just round off there. 4177 is this cluster, and it's going to be your overnight high. It's your prior high of day, and it's virtually the value area high as well. So 4177, we're certainly opening inside of value. You can see that value area low is down here. So value shifted higher with price yesterday, which is noteworthy. This is the value area. This is the entire prior day's range. So if value area is in the upper portion, it just tells us that, yes, folks were willing to commit new long-sided volume up here towards the top of the range. It's not like there was a bundle of volume down here and then very sparse throughout the move higher. No, there was some true strength to that. So overall, this is still a balanced indication for the open, but again, slight up arrow here just because we're opening towards the upper portion of value. We're opening above the point of control. At least we were when this was up here. So some balanced indications, but certainly on the bullish side of balance. It's not like we're threatening a big breakdown. It's not like we're totally still inside of the daily range. We know that we're above 4160. So that, of course, is helpful. Let's take a look at question number 2, which of course is where are we opening in relationship to the overnight range? Here's the high, here's the low. Of course, we're opening in the midpoint of the overnight range. That one truly is a balanced indication. Certainly just noting that there's not decent risk reward here for an early morning trade or decent risk reward here at the overnight low for a early morning risk reward trade. It's kind of a patience play based on question number 2. And last but not least, certainly we've got to evaluate the overnight inventory, net long, net short. To do that, you just extrapolate the settling price, how much time spent above, how much time spent below. We're certainly net short, right? We are certainly net short in the pre-market session here. A little time spent above, a little time spent above, but for the most part, we were underneath the prior day's close. So what does that tell us? Well, things are starting to neutralize a little bit. The more volume gets put in literally at the settlement price from the prior day's session as the retail sales numbers came out. But for the most part, if we're slightly net short, let's just call it like 60% net short because of this neutralization. Neutralization, is that even a word? Some grammar police person, please correct me in the chat there. Neutralization. As this neutralizes is probably the proper term. Anyhow, 60%, it doesn't tell us that there should be a major correction to that inventory, which means that, hey, with no shock and awe, with a very balanced open in the overnight range, I don't really think that there's any reason to be overly aggressive on the open. I think it's a patience play, as I'm sure you knew I was about to say based on our answers here. It's a patience play. It's a, hey, we're probably going to get some kind of opening range here, and we'll learn something about this market, very simply put, when we break value area high and the prior high of day, and the overnight high. When we break all this stuff here, we'll learn something about upside outcomes. Again, that number is 41.77. That would be the top watch for a breakout. And then we'll also learn something if the pullback goes deeper than the top of the daily balance area, 41.60, and the overnight low, right? So in this area here, I'm going to clear this up. Take a mental snapshot if you want it. Mental snapshots disappearing in 1, 2, 3, boom. Clean slate. If we're in this box right here, I think it's worth being patient. I think it's worth being patient in this market. We're waiting for the resolution of the prior high of day for continuation. 41.85 strikes me as a very reasonable target. Look at the range from yesterday. You mean to tell me that we can't do something like this? You're out of your mind if you think that we can't go to 41.85 on continuation for today's session. Now, again, it requires breaking out over 77 first to get out of this little pre-market range that's been developed, or I'll give credit where credit is due. I will always give credit where credit is due. If the market breaks 41.60 and can prove it to me with a lower high underneath the overnight low, underneath 41.60, I'll say yes, we are back in the range. We have a look above and fail. LAF, we're not laughing at anybody. We have a look above and fail. And the target should, in theory, become the bottom end of the range. Now, I'm not calling for the bottom end of the range on today's session. I would just say that if we get a lower high underneath 41.60, it is more reasonable to trade scalps short in the downward direction, right? We're looking for like a target here. The breakout point probably strikes me as the most noteworthy. Not necessarily value area low, but the breakout point here, the number on that would actually be 46. So 41.46, the breakout point from yesterday, which led to the more impressive afternoon rally. So 41.46 is back here, all right? Just north of your value area low, 3 points higher, okay? So those are my situations that I would be watching out for on the open here. I think that we could easily go with an opening range in this area. This, interesting for upside, higher low above the prior high of day, a break in the first place, 41.85 becomes a target. It's roughly about an 8-point move. Certainly worth keeping on your radar for that to unfold. And then, of course, opening range breakdown, lower high underneath, the top of the daily balance, the overnight low as well here. I would use 41.60 as a level. 41.60 really represents more cleanly the top of the balance on the daily or even the hourly if you look at it from that perspective, right? Lower highs here, also interesting. So, based on the little momentum that's coming in now, I think it's worth reevaluating and saying that, yes, the shorts are a little bit more net short in the pre-market, but until we actually break this overnight low, until there's much more concern in the downside and then lower highs prove it underneath, I don't know. I would still be patient in this range. The rally from yesterday was confirmed. If we look at the internal screen in full, I mean, strong inflows into the market. Not quite up at 300 million, so that's it could have been better. I won't sugarcoat that, but it's certainly not like we were just stuck at the zero line. The inflows did support the move. The advanced decline line moved towards trend zone. It did not stay stuck at the zero mark, and the cumulative build yesterday was solid in the upward direction as well. So the bullish underpinnings of the market are there, which is why it needs to be the lower high underneath for the confirmation of shorts, right? Lower highs underneath 41.60 before we get too gung-ho about trading this thing in the downward direction. All right, let's quickly make sure that JP Morgan is not, so I wanted to make sure that the press conference here wasn't the thing putting downward pressure on the markets. Still looks like it's just the digestion of the retail sales. Just the digestion of the retail sales, which we just saw came in at a pretty significant miss. But for the most part, I mean, folks, in the grand scheme of this range, we're basically unchanged. Okay? So that's the analysis of the ES for this morning. Very, very simple on today's open, being patient in this box here. We then want to see a break for continuation to 41.85 or a break and lower high, specifically the lower high in the downward case because the internals do not support selling in this market, right? A break there and a lower high under 41.60 is the more attractive downside trade. Something that would help this, of course, just putting the pieces of the puzzle together, right? The ES is obviously not gapping out of range. The XLF financial sector is gapping out of the prior day's range. If financials fade the gap, aka make a move in the downward direction, so if the XLF is red from the opening print, that's this column right here, if the XLF starts printing red, that's where you would say, okay, maybe it makes more sense that intraday, although the financials gapped up, we have downward pressure, which makes this move more likely in the ES. So that's the main intermarket dynamic that I would want you to focus on for today's session. How do financials impact what takes place in the ES? All right, that's what I've got for you in the ES analysis. You know my situations, you know my scenarios. Let's see what the chat seems to think is likely for today's situation, for today's trading session. That's what I meant to say there. If you're a market bull, thinking that we go opening range, break, high or low, continuation in the upward direction, at least tagging 41.85 on today's session. Let's see a number 1 in the chat. You are bullish. If you're feeling a little bit more neutral, that we might go opening range, attempt the highs, but come back down underneath the lows, sideways, whatever. The idea behind a number 2 for today's session specifically is that we get balance and likely value is overlapping to up. So maybe there's a little bit more exploration above your prior high of day. The bears, of course, you guys know the bearish situation. It's a breakdown, lower high, and continuation back to probably, I don't know about the midpoint of the daily range, which is here, 41.32. That's the level that we were concerned with yesterday, but certainly the breakout point here at 41.46. 41.46, just north of the value area low, is kind of the requirement for a situation number 3. That's the bear scenario for today's session. And if you've got no idea what's going to unfold, a number 4 is the number for you. You're an ostrich. All right, so let me type in the official clickable YouTube poll, and we can keep it rolling from there. So what do you think? Question marks. Number 1 is for the bulls. Number 2 is for the newts. Newt. There we go. Number 3 is for our bears in the chat. And number 4 is the ostrich. Good. All right, so clickable YouTube poll is out there in the world. You can participate that way. If you're a lurker, don't forget, stop into your local McDonald's and ask for the Trade Brigade discount, the lurkers discount. I believe they do some deal with Chicken McNuggets. I think that's what the chat seemed to suggest last time we were talking about this. But anyways, we'll let that simmer for just a moment. In the meantime, I'll scroll up and see who we've got, what we've got, any questions, comments, concerns. Now is also a great time for me to remind you, as you click on the YouTube poll, do me a favor and just click one more button. That button, of course, is the thumbs up button. I only ask for it like once. Once a stream, once a video, Anyhow, poll results. Questions, comments, concerns. Anything else? Not much. People commenting on my grammar. I asked for it, so thank you. People will spend, but they're about as tapped out as they can be. Credit lines have been all dried up. That's from MW Harris. Yeah, the credit market's certainly crunching a little bit. That's for sure. Why is the VIX green? Isn't it supposed to be red as usual? I don't know why it would be red as usual. Obviously, as this retail sales report came out, I'm sure it kind of spooked some market participants, so that might be why the VIX is up, but I'm not entirely sure. But after that, we're right into some poll results. So for the most part, we've got 1s and 2s flowing in early, which makes complete sense because we always cover that situation first. Do we flip to 3s? Not really. Not a big switch to 3s, which is ironic because as I move deeper through the list, there's not a lot of 3s, but the clickable YouTube poll is at a 34% response rate for the bears right now. So the lurkers are really, really stepping in here and showing us, what they think is going to take place. So that's interesting. If tech was viewed as a safe haven with the banking crisis and banks are surging pre-market, it seems like a logical thesis to say rotation is on the table. That's from David. Yeah, I think that that's a reasonable way to look at it. Although I wouldn't say that tech was seen as a safe haven during the banking crisis. I would say that as utilities and healthcare started to outperform there, it was utilities and healthcare that were the safe haven, right? And that's always indicative of the recession theme anyhow. The XLK, it certainly held up well. I'm not discounting that it didn't hold up well through the banking crisis. It absolutely did, but I think that's where people were chasing return, whereas the XLV was more of that safe haven type place. So, I guess I'm agreeing with you in a sense that, yeah, there's absolutely some rotation going on with the banks now moving higher. That sort of strikes the market as probably being a more risk-on look. We'll see. We will absolutely see. No, we do not go live on the weekends, although we do have a weekend show that always goes up. I really enjoyed putting it up on Saturday last weekend. That was specifically because of the Easter holiday, but it just felt good to not have anything to do on a Sunday, so maybe we'll do that again and release the video on a Saturday. All right? Cool. We've done it. We've walked through the ES. Everybody knows the plan for the day. We're looking for a move outside of this box right here based on the underpinnings of the market, the strength of the trend, the internals. I sort of think it makes logical sense to be favoring an upside move, but hey, we'll trade it either way. In the downside, we just need that confirmation lower high underneath before we get aggressive there. All right, let's take a look at the NQ and see what's going on with our NASDAQ 100. How is this responding to retail sales? Obviously, much weaker, right? You know that there's not, well, I guess I'm sort of asking and telling at the same time. There's not as much financial representation in the NQ. Obviously, it's much more of a tech index. Everybody kind of knows that, the NASDAQ 100, right? So it's not holding up as well, right? The JP Morgan earnings are not keeping the price afloat there. Regardless, you'll note that we're still in a 4-hour uptrend. We're dealing with this as a balance area. This could be a look above and fail. So intermarket dynamics come to the forefront of my brain when I'm looking at this, right? Let's go to the hourly chart perhaps. Becomes a little bit more clear. On the hourly time frame chart, yesterday's move was all about the look below and fail, specifically in the NASDAQ 100, right? This broke down through the bottom end of the range, whereas the ES was opening in the midpoint. So the signal yesterday for the long, or something that would add confidence to your long-sided thesis, would just be that the NQ was opening back in range after closing underneath, causing a look below and fail. What's the target? It's always the top end of the range. Now, we poked through that, which is really, really impressive. I was not expecting that all over the course of one day. Let's be very clear about that. The expectation isn't for the same day rotation right back up to the top. Just so happened to do that. But now, right, it's the exact opposite situation playing out for today's situation. The ES, on a relative basis, is opening above the top of the range, right? We just saw that in the ES. We're opening above 4160. The NQ has already produced a look above and fail. So if this is going to just rotate all the way on back down to the bottom end of the range, number one, that would be extremely frustrating for the markets. I don't know about you, but I'm sick of range trading. I want to see some continuation here. So number one, absolutely frustrating, but hey, we're dealing with the hand that we're dealt. It would imply, if we move to the bottom end of the range, the ES is probably going to move into its range at a minimum. It doesn't have to fail all the way to the bottom, but it should move into the range nonetheless, and we can target 4146 that we just saw on the ES from that breakout point yesterday, right? So that's a pretty major divergence to be paying attention to here. Again, pair this with the fact that if gap rules are in play on something like JP Morgan, and JP Morgan is actually fading off of the open, right, to close the gap underneath, which technically, if you're not reading the percent change from the open, it's going to look bullish all day as long as we're above the prior day settlement price, which is just totally misleading. But if it's fading, obviously it's downward pressure, and putting the pieces of the puzzle together, right, hopefully you can see how this comes together to form a picture, so to speak. That's a perfect recipe for the ES to probably not get continuation in the upward direction. If the NQ stays in range here, if the NQ finds consolidation, price acceptance, whatever, underneath 3175, or excuse me, 31, what am I saying? 13175, the top of this hourly balance, that could look like, let's just move this over a bit. So here's the balance, right? So anything that does this today just like continues to open up the door for, hey, let's take a back seat on longs in the ES. We had our day yesterday. That was fantastic. But if this is taking place, if JP Morgan is fading off the open, you can see how the picture comes together. It forms a complete, beautiful mural, whatever. It's probably not the easiest long today in the ES if this is the case. All right? That's the dynamic. All right. We've been pretty thorough about paying attention to multiple things at once. If you're only going to pay attention to one thing and you're an NQ trader, this is probably what you want to hear. It's the 3 questions for the opening indications here. We're opening inside of range firmly, right? So that is a balanced indication for question number 1. Question 1.5, where are we opening in relationship to the value area? Certainly inside of the midpoint of the value area. Value area was pretty much central to the prior day's range, so that's also a neutral indication, aka patience right out of the gates in the NQ. We're opening in the midpoint of the prior day's range, inside of value. There's no shock and awe to be had based on those 2 pieces of information. Question number 2, where are we opening in relationship to the overnight range? I've got to adjust the overnight low in just a second here, but for the most part, opening on the overnight lows. That is a bearish indication, but in the grand scheme of things, inside the prior day's range, again, it's just a patience indication. Question number 3, overnight inventory position, net long, net short. What's the deal here? We'll note that we are certainly net short. I mean, no arguing with that. Almost all of the time here spent underneath prior day settle. So for the most part, let's go with like 95% net short. 95% net short. So what does that mean for the open in the NQ? It means patience is the play. However, there may be a correction to that inventory because it's 95% net short. If we do see some lift here, the risk reward makes sense based on question number 2 that we could see a move higher, right? It makes sense that the NQ could see a bounce out of the open, but the question becomes, do we just find a lower high as we just walked, ranted and raved about anywhere underneath 13,175? 13,175. If we find a lower high underneath here, do something like this, sure, we may get that rally out of the gates, but if we find a lower high, you know the deal. We just ran through it on the hourly. Not going to go ahead and recalculate everything that I just went through, right? So that's the deal with the NQ. Very important to watch these 2 things in conjunction today. ES, NQ, same time. Have them up on your screen. Same thing with an XLF market minder in the window. Somewhere over here, just be willing to look at the percent change on the XLF. If it's red, you know the deal. Okay. Next up, moving along, RTY. A little bit more love out of the banking numbers, getting some gap up activity here, but retail sales crushing it on the second move, right? So overall, let's just go to the hourly chart because we know that on the 4-hour we're dealing with balance anyhow. But here's the hourly range. Here is the ascending triangle that we've been monitoring. The overnight high came right into that breakout point. Obviously, it's fading off on retail sales, but we are still above the top of the balance range as long as we're above 1,800. I think that good things are shaping up here in the Russell. That is, in the grand scheme of things, a bullish factor for the S&Ps, right? Speaking to a more risk-on environment. But for this morning's open specifically, we've attempted a gap up, falling back down into range. But again, think about where we're at. We're still above 1,800. It doesn't strike me as a concern just yet. There's the opportunity, just like the ES basically, for any sort of higher low pullbacks above that to maintain a constructive look. I'm just not sure I would be longing the ES aggressively, longing the NQ, QQQ, SPY, whatever instrument you want to use. I'm not sure I would be longing those aggressively until we actually get here and start to look for the turn. Obviously, as this is unfolding, the move in the downward direction, you're looking for weakness kind of across the market from that perspective, right? So constructive, but intra-morning, I should say, a little bit of bearish pressure here until we hit 1,800 if this pullback does continue to develop, and then we look for the turn. So just another data point to essentially have in the quiver of analysis, right? I don't think I've said the word quiver, and I'm talking about like a bow and arrow quiver. When's the last time I may have mentioned that word? I have no idea. I don't know why that just came into my brain, but it did. That's the vocab word of the day. All right. So if you need to, if you've got kids and you needed to share a vocab word of the day, that's the word of the day. If you don't have kids, tell your friends. Quiver is the word of the day, and that's that. All right. RTY. What's going on from a 15-minute perspective? Right. No longer on a gap up inside the prior day's range. Patience on the open. We're opening inside of value. Not going to rehash everything. We know the deal. 1,800 on the downside for the pullback, higher low, continuation or something that does this, good to go. Probably keeps the markets neutral on the open. All right, we've done it in the index futures. Now let's get over to the ETFs and see what's going on with the SPY. Load times on Thinkorswim are dramatically improved this morning. I have no idea why, but I didn't do anything to the system. I haven't done No updates, nothing. I, of course, cycle my computer down every evening, but so far this morning, really, really speedy. Loving it. So keep it up, Thinkorswim. Thank you for, I don't know what you did in the back end, but whatever you did, you fixed. So spiders opening above 411.75, right? That's basically the equivalent of the 4160 in the ES. I know it's a little bit different, but here's your daily balance range. Certainly a bit of a stronger move out of the SPY in terms of the closure above. But for the most part, right, the argument to be made here is that any higher lows above keep us constructive for a move in the upward direction. Retail sales putting a little bit of downward pressure. We know the deal with the relative weakness in the NASDAQ. So we're just going to rehash numbers here. We're not going to rehash psychology and like all the setups. We just walk through that on the futures. The structure is the same. The numbers are the only thing that change. Higher lows above 411.75 looking really good for upside. So pullbacks that do this, continuation in the upward direction. Ultimately, upper edge of the weekly expected move is on the table. That's the weekly equal high as well, off to our left, 416.75. You can easily see how continuation here, it would not be unreasonable for the SPY to put in a green bar of this magnitude, right? Something of this magnitude, maybe it gets a little bit of a lower wick. It's not that far-fetched, right? We had it here, we had it here. Even these bars, as we're consolidating, are not that far off of the range that we've just established here. So I'm not saying it has to blast there in like an hour's worth of trade. It might be a slow and steady grind like it was all day yesterday. But for the most part, this is still within striking distance. Okay, higher lows above 411.75, upsides on the table. Lower highs underneath 411.75. You know the deal, 409 midpoint of the range is the target prior low of day, basically. Next up, QQQ. QQQ. What's going on with the Qs? We just talked about the NQ. We talked about the look below and fail. Now we're dealing with a look above and fail. Notice that the numbers here are quite clear. 318, top of the balance range from here. We're opening underneath, so the idea is the same. Lower highs underneath 318 in our QQQ. Looking for downside, target the bottom end of the range. If we get a higher low back above 318, then clearly we're trying to make some bullish progress in the upward direction. The target would just be the equal highs here first, just north of 320.50. I would call it 321 at this point. 321 would be the equal high target, and that of course does bullish things for the daily time frame chart, keeping us in an uptrend, offering the potential for higher low pullbacks to continue. Of course, we just wouldn't want to see a move down into 314 once again. That should become, obvious based on this balance range, okay? So that's the up and downside. 318 is the morning pivot, higher low above, constructive for longs, lower high underneath, nail in the coffin for probably lackluster day in the ES, right? Next up, IWM, Russell 2000, and the small caps. What's going on over here? Once again, daily time frame chart offering a very clear ascending triangle. You might put a poll on that and say, hey, it's a bear pennant. You could say that, but with bank earnings, obviously, getting us a little bit firmer out of that, I think that it's not, I'm not convinced that it's just a bear pennant yet. It will become a bear pennant. Let's not get it twisted. It will become a bear pennant when and if we break the trend line here, or when and if just, obviously, from a flag perspective, if we're not using a trend line, if this is a range like this, when 171 breaks, okay, different story. New lows, all right, cause for concern. You could even start to think of this as a potential double top. That's fine. You could think of it that way, but it's not a double top until it is. Remember, folks, I want this engraved in my headstone. It's not a double top until it is. All right. The reason being is that every trader in the world out there, every learning trader in the world out there, and every internet celebrity who thinks they know everything about trading, which maybe I should take a little bit of a humble pie here, a slice of that, and say maybe I even fall into that category. Hopefully I don't come off as a know-it-all. I just try to share my experience here. But, everybody's going to say, look, you touched the same area twice, it's a double top. The market's got to reverse. It's got to move in the downward direction. I want this inscribed on my headline, right? On my headstone. It's not a double top until it is, meaning that we must break the neckline. If we do not produce a lower low underneath this neckline here, if there is no new lower low, then there is no reversal. There's a higher low, and then it turns into an ascending triangle. And then it's bullish, right? So, I don't know. That's what I've got. That's again, put that on my headstone when I die, and I'll be a happy man in the afterlife, if there's even such a thing. All right. James F. Kirk says, you guys are not seriously considering long here. No chance. As long as we stay under yesterday's close on SPY, we have the best price and trade location with a short, or on a short with a tight stop. I mean, it's possible. It's possible. I don't think that there's not a short. I would not. No. I just want to address the comment because I think, there's a learning opportunity. If you think that it's a short here, that's fine, but I wouldn't overstay your welcome above 411.75. I mean, if you want a short here with a stop over this, be my guest. If you have a long time frame outlook, so here's the thing, James. If you're an intraday short, I think that this is the correct, like what we've outlined is the correct way to think about this. If you're a longer time frame short, which I have nothing against, everybody has their own time frame of trade, and that's fine. You've just got to trade in accordance to your own time frame of trade. If you've got a 3-month outlook for the S&Ps and you think that the recession is coming, I'm not knocking you for that because there are signs of the recession coming. Retail sales just took a massive hit. We're seeing leadership out of utilities and healthcare. The TLT actually is not outperforming right now, although it was for a brief moment. I don't think that if you've got a 3-month outlook, there's nothing wrong. I don't think that there's anything wrong with saying, okay, you could try a short up here as we get towards these highs. But again, you've got to trade in accordance with your 3-month outlook and, buy options or, have the margin to withstand putting a stop somewhere significantly over the equal highs. If you're talking about, scalping this move, then again, if you want to play a pullback into 411.75, then so be it. But I would think the risk reward favors the opposite, right? This stop here, long here, target here. I mean, you can't argue that this risk reward is worse than a short, right? If you're shorting here and your target is here and your stop is over the prior high, prior close, whatever you want to use, no shot, man. I will, I like to give everybody the benefit of the doubt. I like to say, if you've got a different time frame of trade, that's completely fine, and your time frame of analysis is probably not the same as mine. If what I'm saying sounds like, foreign language to you or absolutely absurd, but if this is your short risk reward using a stop over the high, I don't know. If you're trading pre-market futures, then so be it. It's a totally different ball game, and you can play your game. I'll play my game. And I would just say, if it's working for you, keep doing. Like if it's working for you, man, you do what works for you. You do what works for you. All right. I just want to see everybody. As INF says, I hope INF is still in the chat here. INF just says, I hope everybody wins today, and I think that's fantastic. I just hope at the end of the day, everybody can take a slice out of the market, do your deal, and walk home with some more coin in your pocket. That's the goal, right? That's the goal. As retail traders, we don't have to be pitted against each other. It's a different story when you're a market maker moving, thousands and thousands of lots every day. But as retail traders, I want to see everybody win. There's money to be made on the downside here. There's money to be made on the upside here. I might be on the winning end of your trade. You may be on the winning end of my trade, or the losing. I probably said that backwards, but you get the idea. Anyhow, let's keep this train rolling right along and move into the core list of companies. Yeah, so I think, James, we're probably on the same page, man. It was just a matter of like time frame analysis. Based on the comment you just made there, agree with the long at 411.75. Short was great this morning. Yeah, it's just a matter of time frame of analysis and when you're willing to participate. If you're trading pre-market, then again, all the power to you. Anyhow, let's keep the train rolling. Apple is up first. Core list of companies. What do we see? Deeper pullback, kind of more more along the lines of what we just saw in the NQ. Anyhow, that shouldn't strike you as a surprise, considering Apple is basically the NQ. Apple is also basically the S&P. Apple is basically the market. Let's keep it real, right? Heaviest weighted component almost everywhere. So with the deeper pullback opening in the midpoint of the range here, I mean, look at the structure. It was a straight shot yesterday. There's nothing really offering a ton of support. I would be mindful of the breakout point from here. It's the only thing we really have to go off of at 163.50. So if pullback continues here in Apple, 163.50 is an area of interest, but I don't know if that's something I would trust my mortgage with, right, in terms of allocating a large position size there for a reversal. Reason being is that it's just the midpoint of this 2-day balance. A stronger look in Apple, and I get it, we've got to deal with the chart in front of us, but a stronger look would have been a better push above Then the opportunity for a higher low above the top of the 2-day balance range here over 164.84. It's just not really in play that way on the open for the higher low pullback above, right? What we could say instead is, not wanting to get involved if we're in this area, like this is just like whatever, don't touch it. But if we get the higher low above, like if this happens intraday, the higher low above 164.85, that's definitely constructive on the upswing, right? That's constructive back on the upswing. Target should be 167 equal high from back here. So that's how I would look at Apple. Use 164.85. If we can get a higher low above, I think longs are back on the table for continuation of this move. If we're just stuck chopping underneath and inside of here, maybe again there's a small pivot at 163.50, but I wouldn't trust it as far as I could throw it. All right, that's Apple. And I also, this is a very difficult bar to short into, obviously. I wouldn't be gunning for new money shorts here. Next up, Netflix. INF, of course he's in the chat. And of course he's saying, of course we hope all the homies win. Love to see it. Love to see it. That's the attitude, right? We can all win. There's enough money to be made on both sides of the trade. Netflix, what's going on with Netflix? Clearly balanced range here. Gap green over red yesterday worked for the most part. A little bit tricky on the open. It wasn't the cleanest trade to pull off. Let's just put it that way. Apple was much easier, and even just the S&P, the ES trade yesterday was great. Anyhow, what are we dealing with? We're still slated to be opening in the daily balance area here, but for the most part, you can see the overnight low tests the prior high. As long as we stay above that high, I again think that shorts have a reason to squeeze out of this market from the breakdown on the Tuesday and Wednesday session. So as long as we're above, what's the number? The number is going to be 341.75, 342, just round off there, 342. As long as we're above, at or around 342, looking for the longs to take over here, squeeze out the shorts who got involved on this breakdown from here if they're still even in this thing. All right, and that, of course, could be the fuel to push this out of the daily balance, 355's upside target. Next up, Tesla. I saw a picture of like a Tesla dealership parking lot just flooded with cars, flooded with inventory. Again, I'm not saying that the stock needs to be a short because of that, but I'm just saying it's becoming a social media thing to talk about Tesla's supply issue, oversupply. In terms of the stock and what we're dealing with here, again, a tricky day yesterday. Tesla was not an easy trade to pull off. It was, it was a non-trade for me. It was something that we were watching. But the flag consolidation over 185 into the close, it looks good, right? It looks good to put us back in this neutral range. And then it was going to be, okay, patience here. A break of 188.50 gets us back into the overhead. But look at what's going on pre-market. Back down underneath 185. So if this is going to turn into a distribution zone in here, you just want to see continued pressure on any sort of lift out of the gates under 185. I think Tesla could be a short for the move lower today. That is something that I would watch for. So staying under 185 is constructive on the bear side of the market. You're dealing with much more of it's very sloppy, but just, highs, higher highs, lower highs all of a sudden mixed with a lower low. I think you can build the case for a better short here. Okay? So that's Tesla. Under 185 stays for something that looks like this. Next up, Google. What's going on with Google? All over the place, right? Cup and handle failed, and then it was trying again, and now it's failing in the pre-market. So patience play. Almost everything is kind of a patience play based on just a wacky circumstance of reversals here and some weakness pre-market. That's sort of an indication that the momentum may not continue in the upward direction. Now, to trade this, I would say it's more similar to Apple, where you just want to see proof of a higher low over 106.50 if this is going to rotate higher in Google, right? Why? Well, you've got 2-day highs prior, breakout point with the higher low consolidation above yesterday. So a recapture of that level sort of nullifies, invalidates what's going on with the retail sales dump, so to speak. That's a bit of an aggressive word to use, but you get the idea, right? So the higher low over 106.50 is constructive on the long side for Google. If this trend is going to continue, lower highs underneath, it's not so clear in this zone, right? It's not so clear. Again, with the confusing nature of shorts getting wiped out yesterday, but coming back into range, it's a tough trade to think about in this balance range. I would say stick to things that are clear on a Friday session. Something that's very clear, speak of the devil, is going to be Meta. Meta is very, very clear. Why is that? Well, if we look at the daily chart, and hopefully you caught a piece of this yesterday, this was the primary trade, for me at least. We talked about it pre-market. lower, did the same thing yesterday. Lows, higher lows, higher lows, higher lows, ascending triangle, breakout point. It was all very clear, right? If we took this out looking for the upswing, we made it to the target 221. I mean, you couldn't have asked for a better trade yesterday. I really, really hope you caught a piece of it. Anyhow, going forward, the idea is simple. We just need to find a higher low on a retest anywhere above 216.85. So Meta, be patient if we are selling off across the broad market today. But if we find a higher low anywhere above 216.85, it's back on the table for longs for a break, higher low retest, right? And then continuation. Equal high as the first target back to 221, then continuation for the higher high. So Meta is definitely high up on the list of things to be monitoring. Everything else that we've seen thus far, not so convincing, but Meta, definitely convincing around this area, okay? So that's a top watch. Gold and silver also broke out. I hope you caught a piece of those. We talked about them. I did not bring them into the pre-market preps just because, you start mixing in metal. I feel like it's too much to handle, right? Let's try to keep things reasonable here. We talked about it in the midweek market update, talked about it last weekend in the weekend update. Great patterns. They happen to break out. NVIDIA. What's going on with NVIDIA? If we're looking at this objectively, it's a head and shoulders pattern. We're looking for the breakdown under 262. We're not there yet, but we're getting pretty darn close. Pretty darn close. If this is a topping pattern, remember that we don't need to be the first ones in the door. If this is the measured move, right? Oops, that's a little bit aggressive, sorry. If this is the measured move from the head to the neckline, there's plenty of room to trade to the downside, especially as it suggests to move into the thin structure. 242. 242 breakout point retest here. Daily 50 SMA meeting us there for confluence of super support. If a larger break occurs in NVIDIA, I think that could easily become a target. Certainly, this would put some pressure lower on the broad market, considering it's a heavy-weighted constituent. The semis in general are a heavy-weighted constituent of the broad market, so just be mindful of that here in NVIDIA. All right, head and shoulders definitely on the table, but again, you don't have to be the first one in the door under 162. You can be patient. You can wait for the lower high and then get something that rotates like this. You could wait for like a bear flag down here and then a breakdown, right? There's a number of ways to be patient and not subject yourself to potentially getting faked out with a move that does this. Because if that happens, number one, I wouldn't be surprised. let's be very clear about NVIDIA here. I wouldn't be surprised if something like this does happen, just based on the nature of this move right here, right? So many people missed the move, right? Which is fine. Nobody has to catch every single move in the market, but this is a very enticing stock to be in right now. I think it's way expensive if you look at it from a fundamental perspective. If you try to do like a fundamental valuation, you wouldn't want to be buying NVIDIA at I think it's trading around 60 times earnings right now. 60x, just way out of the scope of where you should be a buyer. But nonetheless, I wouldn't be surprised if that happens just based on FOMO. Everybody wants a piece of NVIDIA. Deeper pullback starts. All those shorts get trapped. Fuels something that does this back into the range. I'm not saying that it gets huge follow through back higher, but I think it probably chops around in this box for a while. Does this? Totally could see that happening. So don't be the first one in the door. Plenty of range to trade for in the downside. This is a patience play. This is a tactful entry play. This is like, hey, let's make sure this is actually going to happen. Here's a prime, beautiful. I could not have asked for a better thing to look at. Here's a double top. It actually turns into a double top with a breakdown through the neckline. This is after a minor rally, right? What takes place? Of course, earnings throw this off kilter, but boom, right? So wiped out. If you're a short in here, you got wiped out and then continued to wipe out if you were, trying to short any of this consolidation. So I think something similar could happen. A fake break and then just chop around in here, punish longs and shorts. I think it's reasonable. Anyhow, we've got 9:20 on the clock, so let's speed this up and just finish up the core list of companies. Thanks to everybody who's tuned in so far. Microsoft breaking out of the top of the range yesterday, closing above, but where are we now? Back in. So look above and fail in a minor sense. Something I would be mindful of here is the top of the 2-day balance. Let's go to an hourly and make sure that we're getting the proper level here. Where would the number be? Right here. 286.60s. 286.60s. Let's go back to a 30-minute chart. And we'll turn those extended hours back on. Why did that not take? That's frustrating. Probably because it's my own fault and I didn't press OK. Nobody's fault but my own. There we are. We're holding up at that high right now. So if we can hold this, I think that there may be an optimistic look for something that does this. If you can find a bottoming pattern intraday, double bottom, opening range, break the top of the range, whatever, stop right underneath that 286.60s based on the pivot top from in here. I think there might be a reason for Microsoft to do something like this. Just, technically, the structure makes sense there. A strong break out of the 2-day balance range. If we can stay above the 2-day balance range, it would make sense that we continue to see the long rotation in the upward direction. All right, that's Microsoft. Last but not least, the mini beast. We've got Amazon. What's going on with Amazon? The laggard starts to outperform, right? The laggard starts to outperform, really not getting beat up in the pre-market too bad here. Considering retail sales are down, you would have thought much more downward pressure here, but perhaps it's just because it's not trading here, which is the equivalent of like Microsoft, Google, all that stuff, whatever. So, holding up over 101.25, obviously constructive, big breakdown, wiped away the red candle. So higher lows that hold up above 101.25, I think long stay on the table. Long stay on the table. It was a very, again, this has not been an easy market to trade with this big reversal taking place on yesterday's session, specifically in equities. The move in the S&P futures, a little bit easier to gauge with the help of the NASDAQ, but, this in individual companies, it gives us more questions than answers, to be quite frank. So let's not try to pretend to know that we know more than we know. I think watching 101.25 as an interesting pivot for higher lows above stays interesting on the upside. But if we fail that, it's right back down into this area where it's like, okay, who's in control? I don't know. You could go through that whole comedy routine. Who's on first? Why's on second? Whatever the heck the continuation of that joke is, right? So that's that. Reese, you're too cynical. You're too cynical. Don't take that approach to the market. Reese says, yesterday's rally was nothing more than a pre-planned short trap set by big money hedge funds, Wall Street, banks against massive retail short positions. No. If you're that cynical about the market, you're never going to have the stones to take a trade. So just don't. I don't think there's anything useful that comes from that perspective. So if that's how you want to think about the markets, if it's working for you, that's fine. But you will never, ever hear me subscribe to that type of theory, ever. Never. All right? It's not a battle against this versus that. Maybe when you get to some very particular nuanced companies, but we're talking like small caps that are easy to be manipulated. If we're talking about the broad market, the interdynamic activity between the NQ and the ES, it held all the secrets. I don't know that it's wise to take a stance that everything's rigged, and I don't know about that. So again, if it, like Reese, I see that you said it's working for you. If it's working for you, that is totally cool, man. Like, you do what works for you. I really do hope everybody has a profitable trading journey. I don't really want to see anybody get involved in the market and just blow up. That's not what I'm here to advocate for. But I personally just can't subscribe to that line of thinking. I personally just don't find it useful by any stretch of the imagination. Anyhow, let's take a look at McDonald's. MCD is on the move, apparently. Why is this? Oh, because this is futures. Let's take a look at MCD over here. McDonald's is pulling back, but after a ripper of a rally here. Goodness. Maybe it's because we've got the lurker discount. Maybe it's because we got the lurker discount. Why do I only read the negative comments? I don't think it's, obviously humans psychologically gravitate towards negativity. It's just why the bearish headlines always get way more clicks than bullish headlines. But I don't want the cynical nature of some of the thinking in the market to transpire to maybe new participants who are tuning into the stream for the first time. Like, I think it's worth having an optimistic look at the market, and not being like jaded about everything rigged against you. So that's why I addressed it. Of course, it was James's comment was not negative at all. It was just a different perspective. Reese, again, not being, if it's working for you, again, hopefully it's not a negative comment. It's just like, to me, in my opinion, that's a cynical view of the market. Anyways, McDonald's. Let's do the technicals on McDonald's briefly. I'm sorry to leave you hanging here, Rebecca, for just a second, and then we'll move along. So McDonald's, what do we see in McDonald's? Ripper of a rally. Let's clean up some of those levels. This candle drives me absolutely nuts. I'll correct that after the stream. But for the most part, this is a level, right? As long as pullbacks hold above 287.43, 287.50s, no reason to be overly aggressive short. I mean, is it wise to be positioning for a new money long up here? Probably not. Probably not. I wouldn't trade it short until there's a breakdown lower high underneath 287.50. So if you're looking for the pullback, this is where I think it starts, 287.50 underneath with a lower high. That's kind of what you're looking for. Let's go over here with the Old Faithful, so to speak. Old Faithful is the hourly, and on a deeper pullback, I mean, this is straight. This is a really interesting move in the upward direction. This is a tricky one. McDonald's is a tricky one just because along the way you've been getting these really incremental higher lows. Notice that it's not like this is a clean break, right? Out of this balance range, this is a clean break. But as this like slow grind starts to happen in the upward direction, it makes it really tricky to pick off where the structure would be in like the grand scheme of things. I would say that this is probably a deeper line in the sand. Obviously, it's the only red day pullback area, and we push off of it aggressively. So there's something interesting here at 282. Maybe a better and deeper pullback happens underneath, and then on the daily chart, you're looking at something that does this. But, you know, given the structure of what's happening here, it's almost like I wouldn't want to touch it. I don't see an obvious setup. I mean, the strength here is clear and obvious. We have big buying momentum. Do you want to be a short in the face of big buying momentum? Probably not. Probably not. You want to wait for a trend reversal. But do you also want to be a new money long up here at the highs? Also, probably not. So that's that. All right. Okay, cool. NugTL. Great show, but it's too long. We should stop 10 minutes before the market open. We typically do, but today we just had to ramble and rant. And as folks are saying, NugTL has been around the stream for quite a while. So let's not say anything too brash in the chat here. NugTL is a longtime viewer, but they're right. To some degree, they're right. If you would prefer to not stick around for the last 10 minutes, you know, I'm not forcing you to be here. All right. So I do appreciate your viewership. Like, let's not get it twisted. I appreciate every single one of you guys who shows up to the stream. It means the world to me. But nobody's chained to the desk and needs to be here. All right. So with that said, I appreciate everybody tuning in. I'm gonna sign off here as the bell is about to ring. And that's that. Hope everybody has a great trading day. Remember that we want to keep the week green. Don't do anything to jeopardize your week. And have a good weekend as well, right? Take some time to enjoy time with friends, family, all that good stuff. The dog, if you've got one. Take him for a nice long walk. All right? Have a good one, everybody. I will see you later in the next one. Join the Discord if you're not in there already. Adios.